Hello, everyone. You're listening to Keyword Crypto with Michael and JJ. If you're new to the show, we are crypto enthusiasts, but we believe skepticism is healthy and we want to ask tough questions. This week, we had the pleasure of talking to Vitalik Buterin. If you're new to crypto, Vitalik created Ethereum, which is the second most common cryptocurrency, and he even wrote the white paper in 2013 when he was 19 years old. Just want to give you all a heads up that because Vitalik was in China when we recorded this and he only had his phone to communicate, we had some audio issues that kind of resulted in awkward silences and echoes and stuff. Hopefully it's not too hard to understand. I think the interview otherwise came out great. We got to ask a couple of questions from some listeners towards the end, so make sure you stick around for that. After the interview, Michael and I chat a bit in response, so if you're so inclined, stick around for that as well. As usual, subscribe, follow us on Twitter, try to engage us as much as possible, and let us know what guests you want to have on next. Without further ado, please enjoy the show. Welcome. Thanks, Vitalik, so much for joining us. It's really awesome that you're here. We really appreciate it.
No, thank you for having me. It's good to be here.
So we have the infamous meme-tastic Vitalik Buterin, and he is in Asia right now, and so we might have some delay issues. So just be aware of that when you're listening to this, and we're going to do our best to work around that. But if there are delay issues, it's not because Vitalik there's anything wrong with him. It's just because there's a long delay. So just keep that in mind when you're listening to this podcast.
Well, there might be something wrong with Vitalik, but that has nothing to do with this podcast.
Yeah, there's plenty of things wrong with Vitalik.
So, why don't we just get into it? We have a couple questions that we wanted to ask, and then we had a couple of user questions that pinged us over the past couple of days. We reached out to some people who listen, and so we'll kind of save those to the end. But yeah, why don't you just jump into it, JJ?
All right, yeah. So, Vitalik, we've seen a lot of interviews, we've read a lot of interviews of you, and one thing that I have to ask is when you first got the idea, when you first got the fellowship, when you first dove into building Ethereum, I want to know, like, what was your motivation to do it? Was it you were actually trying to build a new way of computing? Were you trying to create money? Were you trying to change the world, or were you just doing something because it was a hobby? And
It was definitely much more incremental than kind of sudden big light bulb that changed everything. So for about 6 months before that, I had dropped out of university and basically been traveling all around the world to work on different Bitcoin projects, because back then in this blockchain and cryptocurrency space, Bitcoin was basically all that there was. So I had visited the US, Spain, Italy, a bunch of places in Europe. I had just been in Israel, and in Israel there were a lot of very smart people working on ideas that were back then kind of starting to be called Bitcoin 2.0. And out of these projects, two of the more interesting ones, one of them was called Covered Coins, which was trying to let people issue their own digital assets and process transactions of those assets on top of the Bitcoin blockchain. And the other was something called Mastercoin, which is a more general purpose financial protocol that supported things like issuing assets, transferring assets, exchanging between assets, crowdfunding, financial derivatives, and a bunch of things. And I found all of those ideas interesting. But one of the things that I noticed when working with these protocols is that they really were not being ambitious enough, in that they were not trying to be general purpose enough, right? So what they were basically trying to do is say, the analogy that I use is that Bitcoin is like a pocket calculator, and so you could try to expand on that by having a pocket calculator that has 17 different functions. And so you'd have a function for this, you'd have a function for that, and every time someone comes up with a new application you might want an electronic device for, well, you just make a new release of this pocket calculator and have more new functions on it. And I fairly quickly saw that in the long term, like if blockchains were going to be everything that we hoped that they would be, that this was a dead end because there's just way too many things that people could conceivably want to do with a blockchain. And so I had this one realization, which is that if you have a general purpose programming language and if you have a blockchain that supports a general purpose programming language, then that by itself is basically enough to support like any function, any blockchain application that can be expressed in code. And so that was where the very earliest idea of Ethereum started from.
Okay, that's really thorough. So basically, you were like, this blockchain thing is pretty interesting. We need something that can do a lot more, and I'm going to start doing it. Right? That's kind of what that was the motivation.
So, I mean, so for people who aren't super tech savvy, is it safe to say that you wanted to create the handle for a Swiss Army knife that people can just kind of put a different tool into it as they need it?
Even that's not the best analogy because if there's different tools, you still have to buy them. Like the analogy that I use basically just is a smartphone, right? It's like a Swiss Army knife that contains a programming language that lets you like basically 3D print whatever new tools you wanted to and add them onto the knife on demand.
Yeah,
Gotcha.
It sounds
Okay.
exactly what Ethereum is. So yeah. All right.
Nice. So are you happy with the evolution so far of that it's taken?
Yeah, I mean, it sounds like it's kind of turned out that way.
And it's definitely gone much further than I ever expected it would. Like when I was just starting out, I literally thought that it would be something I would work on for 3 or 4 months and then get it done quickly and then go back to university soon. And I myself was just like blown away by the amount of attention that it got, even when I published it for the first time at the Miami conference in January 2014. And since then, it kept growing.
Okay, and
Nice.
the fact that now it's become that cryptocurrency in general has become a big speculative market. You obviously didn't see any of that coming, or did you know that that was going to be a potential byproduct of what you were doing, that it was going to spawn an entire market?
I definitely never expected the market to get anywhere close to as large as it did.
And how do you feel about it now that it is this? Is it something that is it just something that happened and therefore it is, or do you feel a certain way about it? Because I mean, it's the reason that a lot of people are interested in crypto is because there's so much speculation and because there is a market, and Ethereum brought in so much of that. So you must have an opinion about it.
Yeah, no, it's definitely been this really interesting double-edged sword because on the one hand, it just helps to bring so much attention to the space and to some of the ideas around the space. And it's helped to make these ideas of like decentralization, like using cryptography in particular ways, even kind of broader things like just being things being open source and kind of sister technologies like things like zero knowledge proofs and all of these other ideas kind of really mainstream in a way that probably could not have happened if it was just kind of political idealists and tech geeks pushing the ideas forward the same way it was for a lot of the 2000s. But at the same time, there is also this other side to it, which is that the speculation can often really easily get ahead of the reality or even be mismatched with reality. So at the end of 2017, I made these series of tweets that got fairly famous, which was when the market cap of all cryptocurrencies together broke $500 billion. And I basically just publicly said, hey guys, the market cap is $500 billion, but have we earned it? Like, what do we actually have to show for it? And the answer back then was like, honestly, not. We did not have enough to show for it. And now, of course, the market caps are lower, but on the other hand, I feel like we actually have more to show for the amount of attention the space has gotten. So when the markets kind of get ahead that far of what the technology can actually do, like it definitely leads to these big corrections. And I mean both kind of financial corrections and also just corrections in public perception, where people go from like, hey, what is this thing? It seems useless, to, oh my God, it's the next revolution of the internet, to, oh crap, the blockchain can't process more than 15 transactions a second, and now the fees are $9. This thing's useless. And then it just goes back and forth in cycles. And I definitely am trying hard to make the technology itself more useful, so that if people want to start actually doing things in blockchains on a much larger scale, than they can.
So tying into that, where you're trying to do that, do you feel like you still have the largest say in the direction of Ethereum, even though there's the Ethereum Foundation?
The amount of say I have has definitely naturally gone down quite a lot, just because so many more people have come in. Like back in 2014, I remember the protocol was basically designed by myself and Gavin Wood, and a bit of input by a few other people. But over time, there's been more and more people starting to give their own ideas, starting to have their say. And now, if you look at the Constantinople upgrade, this was the most recent upgrade we did to the Ethereum protocol a couple of months ago. I think it was only one of the 4 changes that was made that was initiated by myself. And there's maybe 10 to 20 people that are very actively participating in and making all of these decisions. Now, I mean, Ethereum 2.0, which is the next big upgrade to Ethereum, is still a bit newer, and it doesn't have as large a set of people actively kind of arguing over every feature. And at least in the short term, that's probably a good thing, because you don't want to have too many cooks in the kitchen while an idea is, or a new protocol is still being formed. But it's definitely grown very big with a lot of stakeholders very quickly as well. So like it's even gotten to the point where people in the Ethereum community have been saying Ethereum is too decentralized, which is just really surprising to hear.
Yeah, that's kind of weird.
Yeah, that's weird. I don't think I've heard that much, but maybe it's true. Maybe our people are one. Well, actually, no. How would that work? I mean, obviously, it's not. How does your influence manifest itself now? Is it mainly in creating Ethereum 2.0, or do you feel like it's more like trying to explain what Ethereum 2.0 is going to be?
Some of both. And on the Ethereum 2.0 side, I'm definitely very heavily involved in shaping the protocol and the specification and a lot of ideas. But then there's also some other core researchers like Danny Ryan, Justin Drake, Xiaowei Wang, and a few others that have been really active there as well. Outside of Ethereum too, I've been kind of involved in this Ethereum 1.x process, which is these shorter term upgrades to the Ethereum ecosystem. But like even that's something where I'm not really kind of the leader of the Ethereum 1.x effort, and probably Alexei Akrunov is the one that has even more of a claim to that than myself at this point. So there's just so many different things going on in the ecosystem, and some of them I'm very actively involved in, some of them I'm less involved in, or even sometimes barely involved in at all. There's also times when I just say things and I say, hey, I think this is a good idea and people should work on it. And if it's a good idea, then other people just decide that it's a good idea and they start working on it. So like there's soft power is definitely still there, but in terms of like fully deciding protocol changes, it's definitely very far from like just me doing that at this point.
Okay, so it sounds like there's a bunch of stuff going on. There's a lot of people working on it, and that's great. we have some questions that have to do with Ethereum as a currency, as money. And when you talk about how Ethereum came about and how it was meant to be something that you could build upon, something that was a programming language, something that incorporated a lot of different elements, and now we see it being used as a currency, as a money. Like when did you realize that was actually what it was going to be, as well as a tool? Did you know that from the beginning, that this was going to be something that people traded and used like money, like a currency? Was it always like that? As our next questions are gonna be sort of based on that, and I'm curious to know. No.
I mean,
Go ahead.
Ethereum, the platform, had Ether inside of it right from the very beginning, and like we knew what cryptocurrencies are, and we knew what cryptocurrencies were, like how people used and interacted with cryptocurrencies. So, and we were definitely not going in with the assumption that Ether would be this thing that like pretty much no one would care about except for like some very small set of people. But on the other hand, like we definitely were not going for Ether being the primary point of the Ethereum platform, the same way that Bitcoin, the currency, is the primary point of the Bitcoin platform.
So do you think that the growth of the value of 1 ETH is in any way detrimental to developing nations getting involved and investing in developed nation projects? Because, you know, when you have somebody trying to do an ICO to raise $100 million worth of ETH, that kind of puts small investors in Africa or subcontinent Asia and South America kind of out of reach to allow them to kind of invest in any kind of meaningful way. Do you feel like that's detrimental in some way?
And I guess, first of all, right, cryptocurrencies are basically close to infinitely fungible. So even if there's $100 million project, if all you have is 10 cents, you can usually still put in 10 cents. The one practical limit that does exist and really matter is transaction fees. Right, and transaction fees on Ethereum have bumped up from maybe 0.1 cents at the beginning to a couple of cents now, and there has been periods where they were over 10 cents. And that's definitely a big deal breaker for especially non-financial applications and especially anything in lower income environments. So, like, if you look at the economics of it, the transaction fees aren't a function of the price directly. They're just a function of supply and demand for sending transactions, where supply is basically just the 8 million gas limit, which is just the limit of the amount of transactions or computation that can happen inside of each block. And the demand is just how many people want to send transactions and how much they're willing to pay for it. And it is true that the ETH price and demand for sending transactions often tend to go up together. And well, there's probably two main reasons for that. One of them is just the effect that both the price and interest in sending transactions are both a consequence of the platform being more widely known and more popular. So of course they would go up together. But the second is definitely that if the price goes up, then traders become richer. And so traders are willing to pay more for transactions and that get included in the chain. And that might crowd out some use cases that are not trading. So that's definitely an issue, but I think if we want Ethereum to keep being accessible, then the way to solve that is ultimately to kind of build more transaction space. And that's exactly what we're trying to do with these scalability upgrades with things like sharding and like the layer 2 scaling techniques that we've been working on.
So I guess, so kind of tying in on that, I have a question about the proof of stake stuff. And so in somebody quoted from the white paper saying the linear supply growth model, like in Bitcoin, reduces the risk of what some see as excessive wealth concentration in Bitcoin. and used didn't have a cap to kind of combat that for ETH. So it seems like that was kind of in your mind, like you didn't want it to be a commodity that people hoard, because then if people are hoarding it, people aren't using it, and it kind of is the exact antithesis of a chain that's meant to be used to build other things. So then if you're switching to proof of stake, because it was proof of work, it kind of evolved into that in essence, because early adopters kind of hoarded it and pushed the value higher. And if you go to proof of stake, aren't those early adopters going to kind of condense the wealth even more, because they're going to have the bulk supply of ETH, and then they're going to stake it and just collect interest off that? And isn't that going to be kind of what you were kind of writing against in the white paper?
That's a very good question. I think, and first of all, I don't think it's so much hoarding versus using, because like even if people are hoarding, I don't like that doesn't necessarily stop usage by itself, right? Like there's these big economic differences between and of traditional cryptocurrency, like traditional fiat currency economies and cryptocurrency economies, where people don't even use the cryptocurrency as a unit of account a lot of the time. The bigger thing that I was going for is just that if you have too much concentration, where there is this one set of privileged users that has a large portion of all of the coins, then first of all, that's just an unhealthy thing all by itself. But second, it makes it even less likely for the project and the cryptocurrency to kind of prosper in the long term, because everyone who comes into the ecosystem after the opportunity to kind of easily grab a lot of money disappeared are going to say, hey, this thing is unfair. There's all of these special interests that were around a long time ago before I even had a chance to participate, and why should we buy into the system and empower those people when we could just make our own competing system instead? And it's definitely a worry I have, like having this kind of privileged set of early adopters was something that I was trying to mitigate as much as possible. I think in terms of proof of work and versus proof of stake on this issue, there's a couple of major points, right? So first of all, the extent to which you really can call proof of work a democratic method of issuance has really just decreased hugely over the past 5 years, right? Like between 2009 to 2012, maybe 13 and 14, there was this kind of golden era of sort of democratic proof of work mining, where it really was a thing where you could just spin up a computer, and on your computer you could just go and mine and like earn a few bitcoins and later on earn a few ether. But mining has just professionalized a huge amount since then. And so right now, like every coin that gets issued through proof of work gets issued through this mechanism where you basically can't even profitably participate unless you have at least something like $10 million of capital. And so at this point, it's not even clear that increased proof of work issuance really contributes to like reducing inequality or deconcentration or any of those objectives. So that's the first point. So like I think it's definitely really good that Bitcoin had that period of proof of work mining at the beginning, and it's definitely good that Ethereum has had this period of a few years where the supply has been expanded by a lot, and a lot of people had a chance to get some of the supply through mining. But in the long term, I don't really see it as kind of serving the same objectives. And also another thing that I was not anticipating back then is that I think if blockchains succeed, we're going to continue seeing new cryptocurrencies. And so if we want the market of cryptocurrencies as a whole to become more deconcentrated, then I think just people continuing to issue new cryptocurrencies connected to new blockchain projects that do new things is probably the more realistic way that that's going to happen. And that's happened already to some extent, right? So, like, for example, Bitcoin's market share of all cryptocurrencies has dropped from over 95% at the beginning to about 55% now. And then the number of these smaller projects is just continuing to go up and up. And then there's projects outside the Ethereum ecosystem. There's also all of these projects on top of Ethereum. And so I think it's through that we're going to ensure that it's not just going to be kind of one group of people that existed at one particular point in time between 2009 and 2014 that and it gets the bulk of the benefit of cryptocurrency is rising as an asset class.
I mean, that's pretty. I gotta say, as a guy who's almost twice your age, it's pretty impressive that at your age, you're thinking in these kind of terms, and also not just thinking about it, but producing technology that is allowing this kind of stuff to happen. And I'm just wondering, what's your take on? So, you have the second largest market cap coin in the world, and governments, they're polling people on Wall Street, and they're saying they'd much rather invest, not much rather, like ETH is beating out BTC marginally on what they'd rather invest in and what governments they would like to have on what they would like their governments to regulate. And they say they'd love to see ETH get regulated because you can build so much more off of it. Do you find it? I mean, is it just kind of just surreal at a certain point that at 24 you're hanging out with Putin and heads of state in all these countries? Is it just, are you just kind of rolling with it, or like do you think about it in those terms, or
is anything humbling at all?
It's definitely not something that I ever expected. And at the beginning, I never even expected the cryptocurrency space as a whole to reach those scales, especially this quickly. And that's not to even mention like the role that I myself would have in the whole space.
So then a lot of what you're doing with Ethereum 2.0 and the scaling, it's all of this is happening way earlier than you expected because growth has been so fast and so much that it's kind of hard to even keep up.
That's definitely a big part of it. Yeah.
Okay, so regarding scaling, actually we have a question from a listener. Demian Figueroa in Chile asks, regarding second layer solutions for Ethereum, there is Casper and Plasma, but there's also Raiden Network for Ethereum 2.0. Which one is really going to be adopted? It feels like they serve kind of the same purpose, and no one clearly knows. I'd love to have a straight answer. And I think that's Demian's question. What I want to add to that is, I think for the average investor who is even informed about aspects of Ethereum, or is one going to become a main utility that we know and is going to live on in the future, or is it a lot of trial and error still right now?
So just to clarify one thing, first of all, like Casper and sharding are the layer 1 solutions. So what we mean by layer 1 solutions are solutions that upgrade the blockchain itself. And it's state channels, and Raiden is a kind of state channel technology, and Plasma that are the layer 2 technologies, where layer 2 means building these other networks on top of a blockchain that derive security from a blockchain and that are secure as long as the blockchain keeps doing what it's supposed to do, but do most of their transactions off-chain. So I think there's room for both layer 1 and layer 2 techniques. And a big reason for that, right, is that the two mechanisms are actually cumulative. So if you have 100 times more scalability because of a better layer 1, then that basically means you can have 100 times more scalability through layer 2s that are based on these layer 1s. And so you have times 100 from layer 1, then another times 100 from layer 2, and then you get times 10,000. The question of whether it's going to be Plasma or Raiden or some other state channel technology. And it's still definitely a time where there's a lot of opportunity for experimentation, but there has also recently been a movement toward a standardization in the layer 2 development circles. So people have been starting to think about standardizing plasma, standardizing channels, so there could be one piece of software that you could use to interact with all of these channel applications, possibly integrate plasma and channels together in some way. So it's definitely starting to move toward that. And it's definitely a good time to start moving toward that, because there's already some applications that are starting to emerge that are based on channels. Like Kinext published a payment hub using state channels very recently. Raiden's been progressing quite a bit. And Plasma is not quite there yet, but it is going to be there in maybe a few months to half a year. So I definitely see some combination of layer 1 and layer 2 stuff in the future.
But they're not just concepts at this point. They actually can be put into practice. They're just not quite yet.
Correct. Yeah, there's testnet code for all of these things.
I'd like to swing back to the idea of a hard cap versus no cap when it comes to total amount of ETH versus total amount of Bitcoin. We were talking with Noah last week, and we were talking about the idea of using the reason why Bitcoin most likely won't be able to work as a currency is because it's deflationary versus inflationary, and anytime you have something that's deflationary, people want to hold on to it versus use it. There were rumors at certain points, and I can't remember if you shut it down pretty quickly or if you. I just remember being on Twitter at one point. People were saying that there might end up being a hard cap for Ethereum, and would that kind of stop it from being able to be used as a currency in your mind if that were to ever happen?
So I made a somewhat very controversial comment on a previous podcast about this, which I'll just repeat because controversy is fun and it gets viewers. Yay. Basically, I think supply caps in general, and this includes the supply cap promise from like Bitcoin, Zcash, Bitcoin Cash, like all of these systems should be at this point be viewed as being like much less credible than people view them today. And the reason basically is that there's fairly very little evidence that these systems actually can survive under a zero issuance pure transaction fee regime, right? So these systems seem to be working fine while they still have issuance. But I'll give one example. The total daily block reward for Bitcoin the last time I ran these numbers was about $7.2 million. And the bulk of that is just like the 12.5 coins that get issued every block multiplied by 144 blocks a day multiplied by the price. But then the transaction fees in Bitcoin every day, which is the only thing that's going to be funding the blockchain and its security when issuance stops, is only about $140,000 a day. So that's a factor of 50 difference. Now, if you look at coins that are somewhere on the order of 50 times weaker than Bitcoin in terms of their mining power, you get to Ethereum Classic. And Ethereum Classic has been 51% attacked, right? So there's definitely reason to doubt that at least proof of work blockchains, for example, just are feasible on a pure transaction fee based zero issuance model. Now, proof of stake blockchains, proof of stake is theoretically more efficient than proof of work. It could be possible, but once again, I personally do have this sort of conservative mindset where you value the survival of the blockchain more than you value and being able to have these kind of very hard guarantees about the cryptocurrency, because what good is a fixed supply cryptocurrency if it's dead? And so I personally would not feel comfortable instituting a supply cap for ETH while there isn't evidence that proof of stake actually can survive with the very low level of rewards for stakers that would entail. Um, Now, if there is, then fixed supply is possibly something that the community would wants to move to. But on the other hand, it's also dangerous to make that pre-commitment and then potentially have to walk it back and risk splitting the chain in half or whatever. And this might be a difference between the communities, but when I talk to people in the Ethereum community and I just basically tell them point blank, tell me your opinions on controversial questions, I even had this panel in Australia where I asked people, do you support a supply cap? And I was surprised to see a lot of people answering no, because they basically for the same reasons that I had suggested, but more generally, people in the Ethereum community seem to have this ethos of just pragmatism, which is, hey guys, let's work together and figure out the approach that actually technically makes sense, and let's move toward that first, and let's not let the desire for these kind of really being able to make these really nice and clean statements kind of earlier than we should distract us from that. So
Yeah.
in the short term, I personally don't think we should institute supply caps, but in the long run, if proof of stake works fine, I could see the community moving toward that. Another thing that I could see happening is the way that we're designing the fee market for Ethereum 2.0, the majority of transaction fees actually doesn't go to the block proposers or the stakers, it gets burned. So there's a fixed amount of issuance that goes to the stakers, but then transaction fees get burned. And so if the demand for transactions gets high enough, it's totally possible that the transaction fees being burned could even exceed the amount that gets issued. And that would be something that's really interesting to see.
Well,
Yeah,
so saying that let's all get together and do what makes the most sense or do what's right, that sounds great in theory, but oftentimes what you need is a constitution in order for everyone to agree on something, right? I mean, that's
yeah. I definitely agree with that, and I feel like there is a kind of soft constitution in Ethereum that does kind of guide consensus. So the things that I personally kind of observe that people believe this constitution to contain, one of them would be kind of valuing not interfering with the applications or the state or smart contracts unless there is a really, really good reason to do it. Another one is
and wait, and who and hold on. So who decides that in that case? And I know that that's a question that you get a lot, but it's one that we can't gloss over, really.
Yeah, no, that's a good point. I think a lot of this is things that just observations of opinions that people in the Ethereum community have in general. Now, the other examples that I was going to bring up, which was the desire to move to proof of stake and move to sharding, is something that we the Ethereum developers have said many times publicly in 2014 and 2015. And so people have the expectation that this is the way that they expect things moving forward. But in terms of how these norms, which are basically just ideas in lots of people's heads, actually influence what happens on the in terms of concrete changes to the protocol, that's definitely a complicated question, and it's one that people have talked about a lot. So basically what I think happens is that first of all, most of the proposals that people make tends to be relatively uncontroversial. And so there's this group of core developers, and core developers tends to kind of prioritize and decide what goes into the next fork. And most people's beliefs don't really deviate far enough from these kind of core developer consensuses to even wants to go against them. And a lot of the time that just is enough. Sometimes there are things that are more controversial. So ProgPow is one recent example. And sometimes we try to just take active polls of community members, look at like, discussions on forums, look at like votes and comments on like whether it's these ether votes that we've had a couple of times, whether it's threads on GitHub, whether it's just
So Vitalik, so this is just a criticism that Ethereum gets a lot, that you're going to decide what's best for the community based on these things, and that sounds like it works, but you're just okay with that the way it is, or are you actually taking steps to change the way that system works and that feedback that you get from the community as it grows larger and larger? Or are you saying that the core developers are always going to be able to make the right decisions, and that's just the way Ethereum is?
So it's definitely not through me that these things are happening, right? So I'm not trying to kind of speak the Constitution out loud right now. I'm just trying to describe the kind of feelings of the majority of community members as I see them. And if you were to interview other prominent Ethereum community members, then I expect they'll give like fairly similar observations. So in a lot of cases, this is a process that kind of happens and fully goes through even without any involvement from myself, right? So like one example of this happening without myself was in the most recent upgrade, Constantinople, we decreased the issuance going to miners from 3 Ether to 2 Ether. And I basically did not participate in that discussion at all, right? So someone else proposed it. Then core developers had calls and talked about it. Then there was one of these Ether votes that happened. Then there were some other polls that happened. It became clear that the consensus was in the direction of being in favor of it, and it got included in the upgrade. It got implemented by the clients, and it happened. And the whole process just went through without involvement from myself. Now, what do I want to see the protocol governance become in the long term? Yeah, that's a question that I know people have been trying to figure out a lot recently. I mean, there's been this kind of protocol governance discussion that people have been having, and it's definitely fairly tricky because, like, first of all, right, if you're going to create a governance mechanism and start from the status quo as it is today, the first instinct a lot of people have is to try to formalize it. And formalizing basically means come up with a model of what the participants are, and ideally get to the point where you have a mathematical function that says all of the inputs of the participants go into the function, and the output of a function is yes or no for some particular proposal. So basically what you would have in like national legislatures of companies, what you would have in, countries, what you would have in companies, and so forth. But the problem with formalizing it in this way is that, like, first of all, it's really hard to formalize the extent to which someone is a member of the Ethereum community. And one way we have of formalizing that is just looking how much ETH people have. But then if you look at the actual consequences of the Ether votes that we've had so far, they give some signal, but it's not the best signal because it tends to just get decided one way or the other by 5 or 10 whales that just each put a few 100,000 Ether one side or the other. And so it represents these very wealthy holders, but it doesn't represent this much larger mass of smaller holders, and it doesn't represent people that participate really actively and benefit a lot from Ethereum and contribute a lot to Ethereum, but that just don't hold large amounts of Ether and might only hold like $5 of it to pay for transaction fees.
Okay, so that answers the question. For our listeners that may not know what we're talking about here, we're talking about one of the essential problems with cryptocurrency, because cryptocurrency is the consensus is controlled by the users, and the question is how much control is actually from the users and how much of it is from the people who actually created it. And so it's a very difficult question to ask and to answer. And what Vitalik is saying is that usually what you want to do is formalize it. You want to create a constitution because that seems like something we can all agree on, but that's not the best way of doing things because that's very hard to change. And it's very, very hard to even define what makes somebody able to contribute to that constitution, right? So anyway, thank you for answering that. Michael, do you have another question?
Yeah. So the idea of moving to proof of stake. So I was doing some research on Bitcoin and Lightning Network, and I was listening to Peter McCormack's podcast, and somebody mentioned on his podcast that he was coming up with something different than Lightning Network, but Lightning Network came to market first. And so everybody else has kind of stopped, and then just everybody started using Lightning Network. And to me, that was kind of unnerving that it was just the first to market was the one that they decided to use versus having 4 or 5 different options and people as a community kind of voting on which one would have the greatest long-term benefit for the project. And so I wonder with proof of stake, like as DAGs, so on this podcast, I tend to shill Nano a lot because it's fast and it's feeless. And we have somebody in the crypto space who's kind of big who we can't tell if it's mockingly calls us socialist distribution or people with a socialist distribution agenda. But there's a guy who grew up relatively poor, that's kind of always the forefront of my mind when I'm dealing with these kind of things. So I look at something like Nano and I'm like, oh, it's
socialist distribution agendas are cool, man.
So I look at something like Nano where it's fast and it's free, and I'm like, oh, great. So anybody in any backwater area of the world who doesn't have broadband or this or that or access to infrastructure can use something quickly and free every single time. So is proof of stake? Was the idea of moving proof of stake just because that was the next logical step, or if DAG started to really become more evolved, could that be something that people might in the Ethereum network start thinking about? Or
what's your take on DAGs?
Oh yeah. So once again, to kind of unpack things, there's 2 separate discussions here, right? One of them is do we use proof of work versus proof of stake, and the other is do we use quote DAGs? So for the first question, moving from proof of work to proof of stake is mainly just about increasing the efficiency, decreasing the energy waste, decreasing the amount of ether we need to issue nonstop every year, also just increasing the safety and reliability of the system. So all of those objectives. In terms of making blockchains actually accessible to people that can't afford to pay 10 cents a transaction, that basically is what sharding is about, right? And we are doing proof of stake and sharding together in this Ethereum 2.0 upgrade, but as ideas, those are kind of separate things, right? Now, in terms of DAGs, you'll be pleased to hear that we are using DAGs.
Nice.
So seriously though, right? The word DAG basically means directed acyclic graph, which basically means a mathematical structure where things points to other structures. And if you want it to be a really pedantic mathematician, then a chain is also a DAG. But what people mean when they say DAGs is they mean more complicated structures where one block can point to multiple parent blocks, and you have transactions that get processed in parallel. And so not everyone needs to be processing everything at the same time. And if you look at the architecture of the sharded blockchain, it is that, right? It's not just one chain, it's this fairly complicated web of connections between 1,025 different chains, including this kind of central chain and the shard chains, of which there is 1,024 of them. And you have these kind of cross links between the chains that happen very frequently, and then you have other forms of communication between the shards. So it definitely is using the model of let's do data structures other than simple chains to allow us to process like many more things in parallel and get huge amounts of scalability that way.
So, okay, so you are using more complex versions of chains. Why can't transactions be free?
So they can be very close to free. The problem with making them exactly free is basically that at some point you get like vulnerabilities to spam. So if transactions are literally free, right, then like why should I not just take my like 20 gigabytes archive of all of my songs and my pictures, encrypt it, split it into chunks, and publish all of those chunks as transactions so that I can then force other people to archive that data for me so that I can download again if I ever need to, right? Like there's plenty of very low value per byte use cases of a blockchain, and if you have a system where transactions are priced too cheaply, then those use cases are just going to kind of overwhelm it until you get back to equilibrium.
So in that case, making a fee just to prevent spamming of the system, and that's it. So that, otherwise, people will take advantage of it. And
yeah, exactly. Like the fees we're talking about in sharding, like I could see them being like truly nominal. Like I could see 0.01 cents a transaction at the beginning, even.
Okay, nice. So you're happy about a socialist distribution agenda. You're happy about getting those fees down to zero to help everybody. We're just gonna say,
yeah, we're getting you to agree with everything we want in crypto right now, which is we are a very skeptical show. You're listening to Keyword Crypto, which is skeptical voice in cryptocurrency, and we also are all about that socialist agenda. So anyway, we have one more question, and that is, do you want to ask it, Michael?
Yeah, because this is from Scott Jones. He's on a Facebook page we're both on, and he asks, is there anything in the crypto space right now that keeps you up at night?
Well, what's giving you nightmares?
Yeah. Things that I'm worried about. The systemic risk of Bitfinex / Tether is definitely one.
Let's talk about that for a second. Yeah.
Yeah. I guess, like, so you have this exchange that's published this cryptocurrency-backed token, and there's about $2 billion of them. And it's been consistently run in this fairly non-transparent way. And
you mean shady way, yeah.
Yeah, and like, I mean, I've talked to people who defend it, and they generally say things like, oh, well, they don't want to like hurt anyone. They just have to be that way because there's all of these government agencies and regulations looking to shut them down. So they have to kind of hop around between different places and to try to just survive against that. But then on the other hand, like, that's all fine, but like that's still not an excuse to endanger $900 million of other people's money. And so that's just all of the things that I hear about how the things operating and the kinds of risks that it imposes on the ecosystem, like things like that definitely worry me. And even just going beyond Sure.
What do you think is the worst that could happen in the situation where they aren't careful with that money?
I mean, there's definitely enough money in there that Mt. Gox 2.0 is like the scenario.
And that could crash the entire market and kind of really hurt a lot of people.
For like 4 to 5 years, potentially.
Yeah, I mean, crashing the market is almost the least of my concerns. Like, well, first of all, there's just the people that directly get hurt from that, but then also the backlash that things like that generate. Like, we can't have the space be a space that, like, regulators are scared of because they think that it's just this big, huge, like, minefield of risks that keep popping up once every year.
Yeah, especially
of
because like with
course.
Fidelity and in these Wall Street companies trying to get involved in allowing institutional investors to come in, that's going to definitely give them pause if everything just collapses because of one stable
Yeah,
coin.
this is a really big deal. I mean, we often we talk to a lot of people who are investors, a lot of traders, and a lot of people are worried that Bitcoin and cryptocurrency is going to go to zero if this crashes. And really, that's not the biggest problem. The biggest problem that could happen is that a lot of this development that has been happening for the last few years gets pushed back further, gets delayed even longer, and some of it might even become impossible or improbable. And that would be a shame. So I don't know. I guess we just have to hope that Bitfinex is going to be okay with this money. I mean, that's not having a whole lot of high hopes, but anyway.
I think we do need more competition in, I mean, not just the stablecoin space, but also just in the space of providing good, solid gateways between the fiat world and the crypto world. Because like, if you look at what's the crises that the space has had, like a big portion of them have to do with these centralized exchanges. And the reality is that moving money between the banking system and the crypto world is not something that intrinsically requires trusting centralized entities with hundreds of $millions for long periods of time, right? It requires trusting intermediaries to give you the cryptocurrency when you send them the dollars, or send you the dollars when you give them the cryptocurrency. But that's not money that needs to be in their hands for very long. And so I personally have definitely been a big advocate of just looking at different models for these markets, like incorporating elements of decentralized exchanges, like coming up with better gateways between the traditional banking system and cryptocurrencies and things like that. And I think there's a lot of margin to improve that particular kind of sub-industry.
So we cut you off right after the Bitfinex tether because we want to talk about that, but it seemed like you were going on with other things that keep you up at night.
Yeah, so aside from that particular example, because that's the topical one, as I mentioned, just centralized exchanges in general. Also, cryptocurrencies that really aren't that decentralized and are basically just kind of pure speculation games. I worry about those. And in general, like projects, both from the crypto sector and from traditional industry that kind of pretends to be blockchains without actually having the trust benefits that blockchains are supposed to provide.
I feel borderline uncomfortable asking this question, but I feel it's also kind of important because you have created something that has so much potential for good, but at the same time, it's been used for the last couple of years for so much, like just straight out theft from people. Does that ever kind of bother you, or is it just kind of part of the creation?
No, it definitely does. And I definitely try as hard as I can to kind of be a good actor within the context of the kind of in the space as it exists. And I mean, I've supported decentralized exchanges. I've called out scams. Supported supported things like DAICOs, which is this alternative to ICOs that doesn't require trusting the developers immediately. And I do think there are a lot of ways to use the blockchain technology itself to solve a lot of the problems in the blockchain technology space. Another one I really care about is user account security. So if we talk about thefts, then giving users some kind of secure wallet that they can store funds in without it being either centralized or vulnerable to their own like phone being hacked or lost and them losing everything. Like I've definitely tried to push solutions of all kinds like that forward as well, but then the technology also takes time, and then there's also problems that you can't solve technologically and so forth. So, I feel like we try to do what we can, but then recognize that there's limits too.
Okay, well, now that we've asked you about what keeps you up at night and what makes you uncomfortable about crypto, before we end, maybe I'll ask: you're obviously very still intellectually interested in cryptocurrency and Ethereum and the world of blockchain. What about the space gives you joy? What gets you excited? Is there any part of it that makes you laugh and cheer and makes you really excited for the future?
Yeah, I mean, just the fact that you can go to any country and you just hear about people, coming up with some new kind of DAO structure to help people organize better, or some insurance thing a smart contract to protect people from like hurricanes and floods, or some like
Do you see that directly? When you travel the world, do you see the impact? Do you see the impact on people like directly? Is that something that you notice and you go, "Wow, we're making a difference"?
I mean, I was just visiting Africa, and I met some of the locals there that were participated in the Ethereum hackathon that we had in Cape Town, and even just they told me that, hey, there's lots of people in Africa that are just using cryptocurrencies as a way of like earning money through working online with like first world companies and then bringing it back and converting it locally. There's these like bank projects that are happening. There's projects that are trying to replicate these kind of community-based like savings and credit models that are popular in Africa on blockchains and things like that. And hearing those things definitely lifts me up.
Nice.
Well, that's great.
It's got to feel good.
Thank you so much for sharing that, and thank you very much for being on the podcast. Everyone, go follow Vitalik on Twitter. We're going to look forward to what's coming next in Ethereum 2.0, and then whatever is next for the growth of Ethereum and the Ethereum Foundation.
I mean, we'd love to have you on again sometime in the future, because I feel like we could have a whole episode just on tweeting back and forth with Elon Musk, which is huge. But I feel like you kind of delved a little bit into that with your desires and the stuff that kept you up at night. And so it seemed like that was almost a response to him of like, these are the things that we really need to focus on next. But I just got to say, man, it's pretty impressive at your age, what you're doing and how forward thinking you are, just not about yourself or in your own pocketbook, but
it's incredible. And we feel really grateful that you will come on a little podcast like ours and talk to just two normal guys just trying to get answers. We think that's incredible. And you're doing it from the other side of the world in China. So yeah, thanks again so much. We've kept you long enough, but we really appreciate it. And I guess we'll sign off the show here unless there's anything else you want to say, Michael or Vitalik.
No, thank you. It was good to be here.
All right. Well, make sure to follow Vitalik on Twitter and follow the show.
And we'll have his actual Twitter handle in the notes. So, or actually, do you want to just say it really fast so we don't get all the fakers asking for ETH?
Vitalik Buterin. So my name and no spaces.
Perfect.
And then keyword crypto is just at keyword crypto. And yeah, thanks so much for joining us today, and we'll see you.
Probably also want to pump vitalik.ca, which is a blog where I have some more long form stuff.
All right.
Perfect.
Check out Vitalik's blog, vitalik.ca.
We'll link it below.
All right, everybody. We'll see you next week on the show.
Have a good night. And I think that's why I was a little nervous today, because I think with past guests, it's just been kind of like, let's shoot the shit with Coffee Talk, with with Noah or with Jackson. And I feel like with Vitalik, the dude is so busy. I really wanted to be succinct and not feel like he's wasting his time on just another podcast answering the same questions over and over again. And so that's why I felt like I wanted to.
What we should have done, and I kind of I had a suspicion that it was going to be very difficult to have Vitalik as a guest because he's so robotic. And that's why my questions were very like,
and not in a bad way for people who are listening.
Yeah. No, it's very precise. But that's why my questions, I think, were very much like from a layman's perspective. Like,
yeah,
what was your motivation? Are you cool with the New York Stock Exchange 2.0? What is the average investor supposed to make of all of this terminology for second layer solutions and all that? And like getting him to talk about that stuff is probably refreshing because people are always asking about these technical things.
Yeah, and that's why I wanted to ask him if he had pause about so many people losing so much money to scams. So and that's got for a 24-year-old, like that's got to weigh on your head a lot.
That was a really good question. And I also think that we shouldn't be afraid of interrupting these guests too. I mean, I don't like interrupting people, but...
And we were talking about it earlier before we started hitting record again, this is one of those times where it was kind of difficult because we were having the delay issue. And hopefully we can get him on next time or again sometime in the future where we can kind of jump in, because there were some times when he was getting a little esoteric, and I think the vast majority of our listeners may not have that technical knowledge to understand exactly what he's talking about. So when we have the ability to record like we normally do, we can kind of jump in and be like, whoa, you're losing me and JJ. And we try to have our finger on the pulse of what's going on. And if people don't the way we do, they may be
at the same time
lost.
Last week when we had Noah on, I felt like it was almost a little too basic, the conversation that we were having in some ways. So it's about just keeping it going and making it, making it compelling, but also, easy for our average listener to understand. But anyway, I thought that was otherwise a pretty cool interview, and it's definitely neat to talk to somebody who's in the thick of it like that. I also just kind of wanted to ask him, you're traveling the world, hanging out with friends. Are your friends investors in Ethereum? Or are your friends... I heard children in the background,
That would have been...
when he was talking. And I want to know what the children surrounding.
I think that was that was delay, because I heard that too.
Oh, you think so?
Yeah, I think it was. I think it was his delay. It was getting reverbed through back. Yeah,
it's very possible. Yeah. But
anyway, it's pretty
yeah,
exciting to have. Yeah, cool. It's just surreal that he's, came up with that at 20. 19.
Yeah, I think the story goes, from what I read, maybe on Wikipedia or something, but his father got him into Bitcoin and crypto,
which
would have been like 2011, 2012.
Yeah.
And when we started to ask him, when I asked him what his motivation was, he kind of started to answer in what sounded like a formulaic way, like, I was traveling the world and people were trying to find out this and this and this, and it just seemed like this was the right thing to do. And my question was more of like what made you want to start down this path in the first place? Like your dad introduced you to Bitcoin. At what point were you like, this is fascinating, I need to follow it and I need to become seriously involved with it?
Because it's funny, we didn't ask him, and it was on the list about what we wanted to ask him. It is people kind of give him shit at one point because he had 0.9 at his biggest stake was 0.9% of all Ethereum, and people were like, "Oh, the dude's a billionaire," and he's like, "Well, I'm not a billionaire, and I don't have 0.9% anymore. I spent a lot of it, and I own a lot less than that." And me and JJ were like, "Well, dude, he's the founder. Like, it'd be weird that he didn't have a pretty big stake in it." But if he got in in 2011, 2012 in Bitcoin, he could have, $1 billion worth of Bitcoin, and nobody even mentions that. Nobody even talks about that.
Of course.
So he could have. I mean, it seems like he's one of those guys that got in early, and it's been beneficial across the board for him. But he's not somebody that's just like buying hookers and blow with it. He seems to be trying to change the world with it. And that's really exciting to see somebody that young do that.
Yeah. And you should also never really jumping to answer a question with, well, the guy's a fucking billionaire. That's why. It's just not a conclusion that you can jump to, especially for somebody who developed something so young. Yeah. Because for Vitalik, he's obviously not motivated by money. He's motivated by the project that he's working on and the people that he's working with and the problems that he's addressing and the questions and the math problems that he's got to do. Like, that's what he's motivated by, obviously. And maybe he's not motivated by the pain that people who don't have the privilege are motivated by, because it's funny, we are motivated by that.
He did say when he was talking about people in Bitcoin who have a lot, he said privileged, the privileged few who have a lot of.
Yeah.
And the fact that he used that word, I thought was really telling, because it seems like it's something that's, and especially to have it be addressed in the white paper and specifically call out Bitcoin and people who hold a lot of Bitcoin. That was definitely on his mind when he was creating it. And so
I get very sick. Yeah. I get very sick of people who think that being rich and wealthy and full of billions is an end goal. To me, it's not. And I think it's I don't know.
So JJ always says something to me that drives me fucking ape shit. And he knows it drives me crazy, but he's always like, what's our value? What's the value? We want to put value.
What value are we providing people?
Yeah. And so I think that's a good question, not just to ask poor people at a job, like, why should you keep this person at a job? What value are they adding? But what value are these billionaires adding? Just because you have $1 billion doesn't mean you're actually adding value to society. And we have to ask everybody that question, not just the poor people that we're going to give a job, but the people who are giving the job. What value is your company adding?
There's nothing to. All it has to do with is what is your contribution to the world, and that goes for anybody who wants to do anything for the world. And maybe you, and I'm not talking about you, Michael, but maybe you, listener, maybe your contribution to the world is to become as rich as you possibly fucking can. But then so what? Nobody is going to care about you or love you unless you're contributing something to the world. Now, maybe your contribution to the world is to have a family and raise children and make them wonderful people, and that's a beautiful thing. I think that's actually a great thing to work towards.
But do you need $1 billion for that?
Do you need $1 billion for that? And it's just one of those things that for me, it's not. It's a weird thing when I meet people who think that that's the end game. It's to die with $1 billion. No, you get $1 billion so you can change the world with it, and that's what Vitalik is doing. And I think that's pretty darn cool.
Yeah.
So that's my rant on people who think that money is the answer to life. Just go get as rich as you possibly can and then die.
The podcast. Reach out to us, Facebook, Twitter, because I feel like this is one of the ones that, just in general, I'm really proud of that. Just not that we got him, but just like we started to delve into these deeper issues of you just joking around about socialism and the fact that he was just like, oh no, that's good. It's definitely a good thing. And he thinks about that.
Socialist distribution agenda is cool, he said.
Yeah. So
I think a socialist distribution agenda is cool also.
Yeah, and I think
as are unicorn T-shirts.
Yes,
and dancing
and Vitalik memes on Twitter, because those are great.
Yes. So anyway, shall we call it? It's been all right.
Let's do it.
Thanks everyone for listening. Follow us on Twitter at @keywordcrypto. We'll see you around. Next guest, who is it going to be? It's a secret. All right. Bye everyone.
Bye.